Today in the crypto space, we see a lot of sideways price action today. Bitcoin right around 111,000, taking a slight dip. Ethereum right around 4,300, also taking a slight dip. However, very sideways price action throughout the market. Some altcoins are doing pretty good. We have Hyperliquid, MYX doing amazing. ENA, IP, WLD still pumping to the upside. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, guys, I want to revisit a very popular project that was around during the Bitcoin narrative, and that project is called STX. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunity. Whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here with this market, because we can see a bit of hesitation. The volume is, coming up slowly, but not as aggressive as we want to. Obviously, you can see the market cap still teetering around that $4 trillion mark. What I want to do is quickly refresh this to make sure we got the latest and the greatest. As you can see, nothing really major has happened today. However, there are some altcoins, structurally speaking, showing a lot of strength. And that is what I want to, basically pay attention to. So let's quickly go through the top 100, and then we'll talk about stacks, guys. There's a lot to talk about with regards to stacks, given that it's part of a narrative that hasn't really caught much attention just yet in this cycle. It did a little bit prior, within the beginning of the cycle, but I'm wondering, are we going to get a resurgence of this narrative? And it's the Bitcoin narrative. As you can see, Bitcoin currently is kind of going sideways, not doing much, pegged like a stable coin right now for the last little while. Boring price action it is. And even for Ethereum, as you can see, very, very sideways within this range. We have some good gainers like XRP. We see BNB got a nice move, but this rollover right here, it's gonna roll over, guys. I don't know. Right now, we do see a structure can be played. If it breaks down, guys, we have a bit of a retracement in store. Or what about if it becomes a bull flag for continuation? Regardless, BNB has a structure to play. And if you guys want me to cover the BNB chart, join me live tonight at 8 p.m. EST, where we talk about crypto news and price action. But more importantly, guys, that's a great time and place to request any projects you want me to take a look at. So BNB looks interesting, no doubt. Solana also looking pretty interesting. Maybe it's a bit top heavy here. Maybe we're getting a bit of divergence on those little tops here on the 1 hour fractal. Could be possible. But you can see a lot of the market has been showing a bit of strength in the last bit. Cardano, Doge, even Solana. And we have a Hyperliquid still killing it, doing great, melting to the upside. Sui still okay, still in an uptrend. Yesterday was a bit of a retracement day, but all good. Small time frames, obviously. This is the 1 hour fractal, so keep that in mind. AVAX, not only did it perform okay today, but it's primed, guys. It looks like it wants to really break out, so pay attention to AVAX in the next little while. Obviously, we have to be prepared for downside. As you can see, there's some projects, taking small hits, small ones, like what do we got here? We have the World Liberty Financial taking a little bit of a rollover, down 4.6%. Apparently one of the Trump boys are off the team, guys. We'll try to make some clarity behind that. I'm not sure what's going on there, but I think from a regulatory perspective, I think one of the Trumps needed to leave the team in order to make things proper. So I'm not sure what's going on there, but nonetheless, a little bit of a dip there. We have Mantle showing strength. We have IP showing strength. Near Protocol has been showing a bit of strength today, guys. Looking pretty good for Near. BitTensor as well. Many good gainers, guys, today, but just not much. Like overall, like 2 to 3% on average, pretty stable on average. So quite a boring day, I gotta admit. However, what gets me most interested in days like today, especially towards the tail end of the structures being mature, we start to see structures that are playable. Right? We wait patiently. Patience is key. We wait patiently for structure. Once you get those structures formed and they're looking, mature, they give you data. And that's what I'm seeing, is a lot of good data potentially suggesting for a continuation to the upside. Although there are signals for bearishness as well. Of course, we have to have that thesis, down pat for both bullish and bearish. Just the way we are now, structurally speaking, we can get into some good positions for potential move up. Okay, so I'm definitely keeping that in mind. All right, guys. Today we're talking about Stacks. So let's jump right into it, guys. Stacks, at the end of the day, 64 cents, holding steady. It did retrace significantly. Max supply, unlimited supply. So there's got to be a bit of a burn mechanism happening there. We have the total market cap and the fully diluted. Obviously, you can see, which means that all tokens are in circulation. No risk of dilution right there, which is great. So the question is how are we going to maintain the max supply or the total supply, given that there's infinite, right? There's got to be some sort of mechanism there to keep the inflation at bay. I'm assuming that's the case, and I'm assuming that they have things, nice and, clean there. Guys, make sure you do that deep dive research. Speaking of deep dives, I have plenty of deep dives for you to go look at. I got over 100 of deep dive projects that I've covered in the last couple of years. Go check them out. Links are in the description. What else do we got here? Let's see what they're going on socials, but I kind of want to define what Stacks is, and Stacks, quite interesting part of the Bitcoin narrative. And we always think of, smart contracts being very, very important in this space. Of course, there's a lot of smart contract plays out there, right? And Ethereum brings all those bells and whistles and has shown us the possibilities. Now we have a lot of other L1 smart contract platforms that offer great bells and whistles. But here Stacks is offering a unique value proposition in the sense that it's trying to leverage Bitcoin's technology. Stacks is a layer 2 blockchain for Bitcoin. It enables smart contracts and decentralized applications, also known as dApps, to interact with Bitcoin, using its security, and final settlement layer, while offloading the computation to Stacks. So the execution of the smart contract aspect, the functions that are written on the contract, are going to be executed on the layer 2, while everything else is going to be handled on the base layer of blockchain of Bitcoin. This allows developers to build scalable Bitcoin anchored solutions without modifying Bitcoin's base layer. Stacks uses unique consensus mechanism called proof of transfer, where miners pay Bitcoin to participate, and Stacks token holders can stack their tokens to earn Bitcoin rewards. Interesting value proposition. Okay, so that's that. Now, what they've been up to here lately, as you can see, quick description. Also, we got a decent amount of followers, almost 250,000 followers. Own your finance with Stacks DeFi. So they have a bit of DeFi happening here on the layer 2, which is interesting because we never think about Bitcoin having more utility other than, a store of value, and security and all that UTX model business that we all love Bitcoin for. But all of a sudden we add a layer on top here that adds more value propositions to that layer, right? Learn how you can earn in the global digital economy on Bitcoin with Stacks. Stacks is unlocking the broader Bitcoin economy. Pretty interesting. You can definitely go check that out. How long has this been pinned here for? Only 5 hours. So they're cooking up a bit of marketing here, which is great. You can see they got some other stuff on September 16, which is obviously, come here. The cap on SBTC will be removed, which means that there's going to be infinite supply here. And they're basically saying, learn more about why this matters for the evolving reward system. So go check it out, guys. Do your deep dive research, do your thing. This is a great slide right here, a great visual. House of Chimera doing a great job here. Bitcoin backed one-to-one peg. Okay. Bitcoin finality and security. Great. Decentralized signer network. Peg ins, peg outs are managed by the decentralized group of signers, not a single custodian. And full DeFi compatibility. So being able to attract Bitcoin as liquidity, guys, as you guys know, Bitcoin's liquidity is unlike any other digital asset out there. Being able to tap into that liquidity is definitely a value proposition for Stacks. So as you can see, doing pretty good, guys. Scroll through, check out their socials, get involved with the community, read their white papers, start that deep dive process. this because it's definitely going to give you that, edge fundamentally. Let's get right into it, guys. I know you're here to talk about charts, so let's begin. Let's see what's going on here with the Bitcoin chart, with the Stacks chart, because ultimately Stacks, like many other projects, altcoins are pretty much trying to fight for a floor price. And as you can see here, we have Stacks, just tethering right around this level, right around 63, 64 cents. Beautiful structure, by the way. I don't know what's up with this wick, but you can see it's a Binance chart, and I'm wondering if there was a little bit of an issue there that caused that wick. But nonetheless, let's ignore the wick for the moment, because usually that's either a quick issue, maybe an Oracle issue, maybe a scam wick. Who knows? Do I even dare say that in this cycle? But it is what it is. Okay. Ultimately, what we have to understand is that nothing fundamentally is wrong with Stacks at the current moment, right? We are currently just focusing on value. And when you're looking at value, you're looking at, am I getting a fair value, or am I getting, undervalue or overvalue? Meaning, is it overbought and oversold? How are we, putting or attributing its actual fair value here? And it's based on where the majority of the market is at. And you can see the majority of the volume is all in this level. This level right here, this node, this massive node accumulation range or range of volume can be suggested to be the fair value, given that, we have the point of control and the most amount of market participation here suggests that it is a fairly good value. Are you getting a discount? No, you're not. You're getting in where a lot of people have gotten in and bought and sold and got involved, right? If you're looking for lower levels, guys, you're taking a chance, because you got to admit this thing has already retraced significantly back to the bottom of the range. So let's highlight some key levels. If you start looking at, range lows, I like this level quite a bit. This level right here is quite interesting. Why? Because ultimately you start to see levels of which, let me just clean this up just a little bit. You see levels of which you got imbalances, small imbalances that were brought upon previous price action, like right here. This is an interesting imbalance, because there could be a necessity to come back down to this level, to fill this imbalance and, come down here and touch these wicks and play around with the supply, the supply right here. As you can see, there was a nice, beautiful buy up on the demand, but how much supply is there, liquidity there to be had and to be taken? That's the concern, right? And given the fact that the structure at the current moment, it is technically a continuation pattern, right? We're not trading patterns here on the channel, but we do want to take a look at what really this represents, technically speaking, after an impulsive move like this in some sort of, distribution, right? It could be a distribution phase where we're going to continue to the downside, right? And go for another leg down. Obviously, we want a swing failure, right? We don't want a sustainable move to the downside. We don't want to close daily candles and start consolidating for more continuations down. What we want to do at worst case scenario here, I'm talking the worst. You're talking about this structure. As we come down and sweep, we get back above and we backtest in spring. This would be the liquidity hunt that, possibly causes a lot of people to get shaken out of their bags, but not us. Because right now, personally speaking, if you're going to be taking risk on Stacks, you're going to be taking spot buys only. Right? The reality is that we haven't got any major signals of a Bitcoin narrative waking up yet. And based on this chart, technically, we're still making lower lows and lower highs, despite the structure, kind of consolidating here and getting very, very close to the apex of this triangular formation. So based on structure, yes, we should wait for a little bit more to expect a breakout. Usually, like, eyeball it right about 70%. We're close. Now, if we start getting to closer or zooming in here, we start looking at, this 200 daily EMA right here could act as support in the future. As you can see, it does act as support and resistance, defining a trend. We're below it. It's not a good look, right? We would love to get above it. I do see the imbalance above allowing the price to come back much higher to about $1.50, where the resistance is. This is another emotional level. As you can see, I define that to be a resistance, a level of which to get defensive. So what do we do here? Ultimately, it's about getting this exposure for the big picture. The big picture is we're right back where a lot of people have taken risk in the past, including myself, and has enjoyed the beautiful pump. And if you haven't taken profits on these tops where we're getting bearish divergence and not on this exit pump right here, then right now you're in a bit of pain. Why? Because you round tripped it all the way back down. And market makers are going to continue to hunt your positions unless they're done. And that's the thing. I think they're almost done or done. And this is market wide, guys. The reality is the market's starting to look really, really bullish in the last little while. So again, what do we do here? DCA, 100%, guys. This is an opportunity to be buying the bottom of this structure, and at the same time be prepared for any opportunities that cause these shakeouts, because that's when you can buy people's liquidations, and you buy the cheap, and then the reversal will come. If it's meant to be a sustainable rally, what we'll do is break down and flag out and continue with an exchange of hands and continue coming down. If it's not meant to, we'll come down for the sweep, hunt the trend line liquidity and maybe these bottoms, and then get back above and back to sin spring. So that's what I'm looking at the current moment. Let me quickly take out the oscillators. By the way, guys, if you want to know more about these oscillators, they're called Synergy Signal. I got links in the description for you if you're interested. But as you can see, this is a common topic that I've been covering on the live streams lately. The worry is this. The worry is that, do we have to get oversold every single time? Let me zoom in here just a bit. Let me just amplify this so you can see what has been going on. We've gotten very accustomed to waiting for full resets of momentum. Getting oversold and getting overbought over and over and over. That's bear market structure, especially sideways bear market scenarios where we're getting into a sideways channel for 500 days. We've seen that before, right? Now, ultimately, what we really want to see is trending price action, and to the upside, obviously. And when that happens, you have to understand is that we stay overbought more than we are oversold, because we want to be trending to the upside, given that we want momentum to be slowly and evidently a bias to the upside in being overbought. So in that case, the question is, like here, where we didn't get oversold and we made a higher low in comparison to this, are we making another higher low right here and not getting oversold and perhaps getting overbought again? Is that possible? Guys, anything is possible. And from a statistical probability, yes, that is the case. However, guys, this could also be a scenario where, we do come down for a big move, and we come down to get oversold after many people expecting this to roll over or roll to the upside. What I'm most worried about is the volatility. Volatility right now is overbought. And if you notice that every time we're overbought, we do come down to get oversold and we get a bearish response. And is this bearish response going to make this thing fall? And if it does, guys, and we get oversold, we're going to see stacks come down for that sweep that I just mentioned, to sweep the liquidity at lower levels and to potentially start moving right back up where it came from. So this right here, this could happen. I don't trust trendline liquidity. I don't trust trend lines because of the liquidity that is trapped up in there. It's usually retail liquidity. And retail, unfortunately, they're here. They're not traders. They're just retail. And they're very emotional and very irrational. So in this point, I'm waiting for an irrational move to the downside so I can rationally accumulate. And that's the way the markets work, guys. So the volume is beautiful in this structure. I can see great volume, a lot of good interest in this level. Market participation is beautiful, but ultimately, this is a DCA moment. This is a moment not to take heavy risk, but to slowly accumulate as many indications that you get as a reversal. You should. Right now, we're at horizontal support, diagonal support, bottom of this accumulation range. Buy a little bit. Sweeps the low, buy a little bit more. Gets back in the structure, buy more. Breaks a previous high and makes a higher high confirmed, buy a little bit more. If you get any signs of a change of character here, you should be building a position. Okay, that's what I would be doing here in this current moment. Obviously, not financial advice, guys. Do your own thing. But I'm just sharing what I would be doing with my money if I were to be getting into stacks. And to be honest, I'm still holding a little bit from here because I didn't exit my position completely. And I am interested in DCAing the profits that I took from up here to put them right back in to compound my possibility of another pump to the upside. Okay, so that's on stacks. Obviously, you have to be bullish on the fundamentals and the whole narrative and all of this, but stacks, you remember what stacks did earlier on when stacks was really pegged to the Bitcoin chart. Lately, it kind of depegged a little bit, guys, you got to admit. Okay, so let's zoom in to lower time frames. Let's touch upon the 4-hour. If you're going to be trading the structure, trading the range of the structure, you have to understand that right now things look pretty good. We did round off of that fat rounded bottom. Look how nice that looks. In fact, we actually broke above and we confirmed the change of character by making higher lows and higher high. Now, the question is, do we maintain this uptrend that we've developed here? You can see that we've made lower lows and lower highs. At this point, this is defined the change of character, made the higher low. We officially made the higher high. And now all of a sudden, do we actually start moving and continuing to the upside? Guys, the probability is yes. That's the truth. That's the probability. The thing is that do we get sweeps along the way for late longs, late individuals buying into the pump? Do we get that? Most likely, yes. You see how the market has its ways of punishing people that don't take risk. But it's not that you don't want to take risk. You just want to take calculated risk, right? Calculated risk is one that understands invalidation of a thesis. If you bought into these levels, you have a clear invalidation at these bottoms to put a stop loss and get defensive and build your position into the zone. And eventually, when the price moves, your entries are fairly safe even on a pullback. Why? Because you took the risk at the right time. There's no trade out there that's risk-free. However, you can plan your trades to mitigate that risk and get in from a position of strength, which is buying the bottom. Okay, so this is something we have to understand. Let's take a look at oscillators. Guys, we cover all of this stuff on the live stream every single day. If you want, guys, tons of alpha every single night. Feel free to join. And the Discord, guys, absolutely free. Go check it out. What interests me also here on the 4 hour is that we haven't gotten overbought. And considering that we kind of did get oversold here and that we've seen the divergence flow, look at this, guys. Look at these expansions. This gets me excited. Look at this expansion, the red expansions in the background. As we are coming down, they're getting weaker and weaker and weaker. What does that tell you? That's class A bullish divergence. Momentum is doing the same thing. The purple doing the same thing. That's class A bullish divergence. We got our first green expansion right here. Beautiful. Guys, there's nothing more you can ask for here on the 4 hour other than just start DCAing for big picture moves on the daily, using the 4 hour as your entry, as your accumulation range, as your passive limit order accumulation range for a bigger move to the upside. What do we see here? We see EMAs. Okay, we see EMAs trying to cross here. I get it. It's not a good look. Did we actually cross? No. Did we get a red histogram bar yet? No. Could it be a shakeout? Could it be a fakeout? 100%. Did we battle? Did we get the class A bullish divergences and battle to get to the bullish control zone? Oh, yes, we did. The thing is that we eventually want to stay sustainably above this level and slowly get into an uptrend where we start expanding like we've done in the past. And once we fight to get into the bullish control zone, expect pullbacks. But eventually, we could get some great expansions, great moves to the upside. And I'll tell you this, Stacks is due for it. I just want to get on the daily here because it would be nice to see how previous expansions looked like. Look at the last expansions, how we battled to get into the bullish control zone. And then we get these beautiful expansions to the upside. Let's correlate to price action. As you can see, we'll definitely see some great moves upwards every time we see those purple expansions. Look at that. Boom. Beautifulness. This is what we kind of want. We want to see nice bullish control zone price action, but we are in there and we're getting there with some strength. Look at this, guys. So I do see the vulnerabilities. And as I pointed out, yes, this could be a continuation to the downside. And yes, we could get the sweeps down and we could, hunt liquidity at the worst possible levels, at bear market bottom levels. However, guys, for a spot bag scenario, those are opportunities to accumulate because you're not buying tops, as you can see, and you are accumulating at bottoms. Just measure back from this general area to the, modestly speaking, to these tops. Look at the percentages, guys. Very, very lucrative opportunity here, despite the volatility that we could embrace in the next little while, is definitely still a very important range to revisit, which is back here right around $2.65. I would be interested there to see this range eventually break out and get into price discovery. All right, guys, so we did pretty good here today. If I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one. And don't forget, buy the dip.